Okay, let's take a look at Aegis Logistics, which is a very interesting company with an excellent track record. It's run by two very solid entrepreneurs, one who has an MBA from Boston University and another who has an MBA and bachelor's both from the University of Pennsylvania, or as many of you might know, Wharton Business School. Now, over the last 10 years, this company has done tremendously well. Started off with a 300 crore top line, which today in FY20 closed out at around 7,000 crore. So that's a 38% sales CAGR over the last 10 years, and there's very few companies that can do that. Secondly, while profitability has not grown as much in tandem as it has with the revenues, it has still done very well. Today, your EBITDA stands at close to 350 crore, but mind you, this is after a one-time ESOP is being expensed to the P&L this year. So actually, optically it looks less. But if you want to figure out what the EBITDA of this company really is, it's more closer to around 500 crores or slightly higher than that. So they cater to the LPG segment, both liquid and gas, and what they do is provide infrastructure at ports that are then connected to customers via rail, road, pipeline, essentially for the LPG. Now, LPG is something which is not produced in India on a large scale. Currently, it's being imported. And Aegis is one of the key players that enables the terminal infrastructure, or rather operates the terminals, which allow for the ease of flow of LPG into the country. Now, he's recently been on a massive capacity expansion plan. His capacity has more than 3x, and by Q4 I'm saying, so 2 quarters down the line, it'll have been 3x of what its historical average was a couple years ago. This same capacity expansion has been done while debt is being reduced. So that's a testament to how strong the cash flows of this company are, that they can fund capex internally, and that too not just a small capex. They're literally tripling their capacity, but at the same time keeping their financial situation in check and not increasing their borrowing. So that's something to look out for in this company. Given that they can fill the capacity and the management is confident of volume growth despite the macro environment being quite difficult, the stock might represent a very good long-term opportunity for a lot of investors. It's got great growth history over the last 10 years, good corporate governance. It's in a monopolistic segment to the extent where there's not too much PSU or too many players that are currently foraying into LPG infrastructure in a big way. But this can change, and that's also one of the key risks, that tomorrow if LPG becomes a trending fuel over here and we see a lot more domestic players entering the segment, or if there's manufacturing here that begins in a large way, that might potentially hurt Aegis's prospects. But if you listen into the basic calls, management feels fairly confident of the growth runway ahead, and we at ET Now would just like to bring it to your attention that it's definitely a top performing company in its sector. It's a $1 billion company. It's done very well, and it's something that you should also look out for long-term investment in the equity markets.